most of us went into this year thinking, oh, it's the post-halving year. We're going to have a crazy good time. It's going to be a good NGU number go up. I think a lot of people were having unrealistic expectations about that. And so, earlier in the year or even last year, there were people talking about, $1 million Bitcoin. Shout out to my friend Samson Mao. I love what he's doing on Aqua, but I disagree on his $1 million prediction. At least now, I think it's more likely to happen, let's say, in the early 2030s, maybe 2032, 2033 is more likely, $1 million per Bitcoin. But I think people are a little bit upset in some ways because they feel like, oh, if I had just been in Nvidia, and again, it's easy to cherry pick, right? It's easy to cherry pick and say, well, if I just timed the exact thing and bought that instead of this. And, look, I think there's you have to zoom out and understand there are times where Bitcoin gets ahead of itself and gets, behind itself. Or if you're looking at like power law, there are times where we're above the line and then we're below the line. So right now we're a little bit below the line in terms of the trend. I think the trend price is maybe like 110, 115-ish in that range. And as we speak now, it's 95K. And I think it's also fair to say with the treasury companies, there was massive hype, right? Halfway through this year, let's say around June-ish, around there, May, June, July, around that time, there was huge hype for all these treasury companies. Some of that has obviously now dissipated. There's a lot of these now trading either at MNAV, at 1x MNAV or below. My reasoning or thinking on that is it is more volatile than Bitcoin itself. Like, I think you've just got to be honest about that. And also, I think it's fair to say there was overhype, right? People were buying. I think the simple answer is people were overpaying on the MNAV, right? They were overpaying at like 5x, 7x, 8x, or even higher MNAV for that company when maybe I see it like there is some premium that's justifiable, but maybe just it wasn't like that much premium justifiable, right? And to be fair, it is partly a sentiment thing. So it's not that the companies themselves, the treasury companies, can control the sentiment for their stock. There was just a lot of hype. Now, I think there were, does that mean every treasury company is going to do well? No, some will succeed, some will fail. But I still believe that there is fundamentally a business model there, which is that can you borrow, cheap fiat or get access to fiat cheaply, let's say 10% or less, and can you buy Bitcoin growing? Currently, on the power law, it's growing about 40% per year, but it is going to taper down. So if we average it for the next 10 years, something like 30% per year, right? I think that's the fundamental business model. And then that's the question. Do you believe there is a premium justifiable for these things? Now, look, that's a question for everybody for themselves to decide, okay? Think about it like this. If you just go and buy... Now, obvious disclaimer, not your keys, not your coins. First and foremost, self-custody Bitcoin. You should always hold Bitcoin first before you even think about dabbling with treasury companies. Just want to say that up front. And again, I will remind everyone, I'm an advisor with Orange, which is a Brazilian treasury company. I am an investor also, so I put in coins there as well. I've not sold a single stock. I'm hodling and I see it as a medium to long-term play. But I'll say it like this. If you just buy... Now, if you are a normie who's not comfortable with self-custody and this person is thinking about buying an ETF like IBIT or FBTC or one of these, you're not getting increased Bitcoin exposure. With these treasury companies, they actually have the ability to try to access cheap equity or cheap debt and try to use that to accumulate more Bitcoin. Now, you have to balance that with the risk of, okay, are they a professional team? Are they competent? Do they know how to fundraise? Do they know, all of these other aspects? Are they taking on custody risk? Which, yes, they are. You have to assess those different risks and blend all of that together and think, okay, what is the premium that I believe is justifiable? Now, for some people, they'll say, no, not even once. Treasury companies, not even once from their perspective. And fair enough. If you just want to hodl Bitcoin or earn and spend Bitcoin, hey, more power to you. No disagreement or objection to you there. I think for other people, they are okay with some level of risk, or they're okay with some different slicing, right? So as an example, maybe they're not comfortable with the full volatility of Bitcoin, but they're okay with some kind of stepped down grade, or the way Michael Saylor explains it, it's like an oil refinery giving out different levels of oil or different types of oil. So there are some people who are not comfortable with the full volatility of Bitcoin. So I see it like there are different trade-offs with that, and that's where if you're looking at like the preferred share stuff or the common equity of these treasury companies, the idea is how much of a premium do you believe they are worth, right? Is it 1.5x? Is it 1.3x? Is it 2x? I don't know. That's a question for everyone to think for themselves. I believe there is a premium, maybe longer term it settles, it kind of comes down, but there will be these kind of spikes up and down as we see bull and bear cycles. And I think my explanation is there was some overhype in the last 6 months or so, and now the sector is taking a lull. I think it'll come back, but it is about having that medium to longer term view with these treasury companies if your goal is to actually outpace Bitcoin. And I believe they will, but it's just a question of, you have to understand the risks that you're taking, and your entry price and entry timing certainly matters.
This is super interesting because I was always at the stance, just self-custody, don't do anything else. Last week, I had a podcast with Chase Palmery, and
From Acropolis, right?
Acropolis, exactly.
Yeah, I ran into him in Brazil, actually, at SatsConf just recently. Yeah.
Yeah, and just like I recorded last week, I don't remember the day, but it's anyways, and he explained for the first time ever the treasury companies. Even though I had Sailor on, I had so many people from treasury companies on. I had you before, and I had really probably 50 great people on already about treasury companies, and it made a click. I was like, oh, I should at least dabble in them. I should research deeper. And I just on that day, I bought a few shares of Strategy. Not because I think that is the ultimate play, just because I was like, hey, I want to learn about it. And it's easier to learn about it if you have the foot in the water, you kind of get,
dipping the toe,
you're gonna have kind of skin in the game, and then you're more motivated to research about them. The same way I did with Bitcoin. I bought Bitcoin when I still thought it's a scam, because it motivated me to learn deeper. And so I still think you should always and forever build out your self-custody Bitcoin stack first. So if you're this is your first Bitcoin video, go to Bitcoin, go to self-custody, and then come back in 2 months and then learn about treasury companies. If you build out a small Bitcoin stack, as the treasury companies also do. So copy their strategy first and then see what they can do for you. But it's really interesting because when you look at the new era, 2 years ago, nobody talked about the treasury companies. I mean, strategy was already around, but nobody talked about it in that amount that we're not talking about it. There are many different nows. And the ETF just, almost 2 years ago now, was introduced in the USA. Is this just a different era that we are now living in? And this is also maybe that's why the price kind of moves in a different way?
So, and I'm sure you saw there was a famous article going around about kind of making this analogy, which I'm sure you saw. It was like Bitcoin is having its IPO moment, right? Now, it's a quasi-loose IPO moment. It's not technically an IPO, but the idea was, look, these early cypherpunks and libertarians who got in early years, they are kind of having their liquidity moment, right? And that's where a bunch of them are kind of dumping and whatever. And probably many of them still believe in Bitcoin, but they're just kind of lightening their stacks a little bit, or maybe they're transitioning some of their stacks into treasury plays or ETF plays so that then they can borrow against it and this, that, and the other. And so I think that's part of it. And of course, there have been these different news articles floating around. As an example, as I'm sure you know, there was one where someone sold some huge stack of Bitcoin. I think it was 8,000, or was it 80,000? I think it was 8,000 Bitcoin. Someone was selling just this massive stack of Bitcoin that, it got absorbed, right? We didn't just insta dump 50% off of that, right? We went from 125 down to I don't know, 115 or something like that. These are the kind of numbers. And so I think it's a similar thing. We are seeing this new kind of institutional bid, I believe. And that's why you're noticing the drops aren't as much these days. Now, of course, that's not excluding, we could see bigger drops, right? I've lived through them, and people should be aware. You can have big drops in Bitcoin, 80% drawdowns have happened before. You should be at least open to that possibility again. Now, I think it's a lot less likely, to be honest. I think it's a lot less likely nowadays. I think now probably 50 or 60% is probably the most you would realistically see, at a guess, right? But it all kind of depends on how crazy things go. If we saw some crazy euphoria, then maybe we can have another 80% drawdown. But for now, we haven't had a crazy euphoria, right? This cycle has just kind of been kind of grinding up, or kind of a move up and then consolidate for a while. And then we consolidate for a little while and then we take another big move up. And I think what it's just showing is just that more and more of these larger pools of capital are coming in. It's institutionalization. And so whether that's ETFs, whether that's, family offices and treasury companies and funds, nation states, sovereign wealth funds. We're seeing more and more of this. I think Luxembourg, the Minister of Finance, when it spoke recently in Amsterdam, talking about how they took a position in Bitcoin. We're seeing more and more stuff around sovereign wealth funds taking a position in Bitcoin. So, it's all just part of the journey. Now, I want to say, like, it's not just about that end. It's also like really fascinating what we're seeing on the MOE side of the question, right? So we've seen like Square and Cash App turning on 4 million merchants in the USA. We're seeing, I did a podcast recently with Karel from Money Badger in South Africa. They've turned on 700,000 locations where you can pay with Bitcoin in South Africa. And so we're seeing, I think in various ways, we're seeing wins across the board in both sides, right? Whether you're an SOV guy or an MOE guy or we're just seeing wins on both sides of that. Now, yes, occasionally we take a dump, we take a dip, right? We're down at 95K or whatever from 125K. So people can say, oh no, we're 30K down from the top. But, so be it. That's life, right? We're just going to have to, you just have to earn your stripes in Bitcoin, and you have to go through some drawdowns on the way up. That's the price we pay for being able to hodl to some incredible gains in the future. That's how I see it.
And I also see a difference of people that have lived through crashes versus the people that haven't lived through crashes. So like the last big crash that I remember was 2021, going from the almost 70K to 16K or something like that, where it was like a huge selling point. And people that have gone through those cycles are a lot more relaxed currently than those who haven't gone through, like, as you said, like earning your stripes in that way. But I also found it interesting because the 100Ks turns out, like, I kind of was saying, like, the 100K will be a huge buying opportunity. Like, will be a huge, like, mainstream media will wake up and like people will talk about the 100K because it's a round big number. But actually, kind of the opposite happened, where a lot of the people said, like, hey, I'm hodling since like 5, 6, 7 years. I made from like a few thousand investments to a few 100,000 or a few 100,000 to a few millions. And hey, I want to buy that home. I want to buy that car. I want to retire my wife, like whatever you wanted to buy with your Bitcoin, totally fine. Like a lot of OGs, as you said before, were maybe fulfilling their dreams, or maybe they were diversifying into other things. Like, no, I don't know what they're doing with those things, but it kind of was to the point where institutions and all those people came in, and then the OGs were selling kind of the IPO moment. I think from Jordi, it was originally, when I saw it, the silent IPO, how he named it, was really, really interesting to see. And this other thing that you mentioned, I think this is really interesting. Because we didn't have a blow off top, we might not have a huge crash. So like I have to believe, and I'm curious what you think on that. If we are not having a huge blow off top at the end of the year, which it gets tighter and tighter with the days going on, it's no longer that many days left in 2025. If we don't have a huge blow off top, maybe 2026 will be like the first year where the 4-year cycle finally actually ends, and it will be an up year, which I think is highly likely if we don't have a blow off top in 2025.
I think this is what many people are observing now, right? If you had asked me a few years ago, I would have been a 4-year cycle guy. But now I'm kind of going against that. And I think, to be fair, this is not just like me. I think a lot of people are starting to be like, you know what? Maybe we were wrong about this 4-year cycle thing, or maybe we overrated its importance, right? Like maybe there's some factor around the halving, but actually it's becoming less and less of a factor. And really what's more important now is just broader macro things, right? Like it's just adoption and broader macro aspects that are really driving the adoption story more so than the halving kind of thing. And maybe next year we are going to see just that up. It's going to be green, 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 right? Instead of green, 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 red, which is what many people would have, expected. And so, yeah, like that's part of it for me, is just Bitcoin is growing up, it's maturing, and so it's not having the same volatility profile it did in the earlier years, and so that just means different things. Of course, I'm still extremely bullish, but it's just a different, it's growing in a different way, and I think that's just part of it. Is some of this is institutional money and funds, they take time to come in, right? I think maybe we sort of front loaded some of the gains in 2024. Like maybe we ran up a bit higher than we quote unquote should have, in a sense of what the adoption was ready, like what was ready, how much adoption was really we were really ready for, because it takes time, whether that's governments, and sovereign wealth funds and institutions and ETFs and all these different things. It takes time for all these things to kind of get ticked at, in the systems, compliance, and then even for the sales forces of those different organizations, or let's say financial advisors, to start recommending it for their clients to say, like, now from our perspective, this is like silly. Why would you only take a 1 to 3% allocation in Bitcoin or whatever? For us, we'd be like, no, that's crazy. You should be taking way more allocation to Bitcoin. But slowly but surely, right? So I think that's just the story. And so I think that's driving what we're seeing, which is this continual creep upwards. And then every now and again, instead of us paying the price in terms of like an 80% drawdown, you pay the price by having to kind of grind it out for a while. Like maybe we just grind it out here for a little bit before we take another move up again.
I don't know. You've been long in the podcast game, so you have more data on that. But I have never seen more bearish sentiment in all my comments, replies, and DMs, and also less interest. I mean, this was always like, it's always volatile. Like February was one of my weakest months, all of podcasting. Then I think June or like maybe in September, like somewhere days was like my best month ever in all of podcasting from my podcast. And now this is kind of a lull month, kind of average, a little bit low. But it's interesting when I see the comments, I've never seen more bearish comments, even from people that are used to be bullish in my comment section, which is really interesting. Have you seen the same thing, first of all? And like, can you compare those things to like past cycles where you also seen like very bearish comments, and like because you have been longer in the podcast game in Bitcoin?
Yeah, so I mean, for me, well, to be honest, I haven't checked my numbers recently. So in terms of downloads, but subjectively, in terms of comments and things I see online, whether that's comments under my podcast or just in general, I would say the sentiment right now is pretty weak. Or if you look at like these typical fear and greed index, now maybe there's a little bit of subjectivity in those, but they do seem pretty low. Like I saw some people comparing the fear and greed index numbers now are similar to what it was in like the 2022 bear market, right? Like the FTX bottom. FCX was blowing up and all this stuff had happened that year, Celsius and BlockFi and Genesis and 3 Arrows Capital and you name it. And the price went to like 16K, right, at that time. So now here we are at like 95K and people are worried almost to the same level, which is weird to me, right? And then if you went back, and the other big one that most people would remember if they've been around is the COVID bottom, right? Like that March 2020, like the price at that time was maybe $9,000 or $10,000 per coin, and almost overnight it went down to like 3 or 4K. Like that's massive, right? It was like a 60 or 70% drop overnight almost. So that was like a very brutal rundown. This is comparatively very easy, right? 125 down to 95. What's that? Like off the top, my math isn't that good, but let's say 20 or 30% ish, 25%, call it. It's not that bad, right? So you can deal with it, right? So look, I think the main thing is just, keep stacking. And to be honest, this is also like, you might have seen this meme as well, the 40 HPW, 40 hours of podcasts per week. I know it's a meme, but I still love it. I think it's a great meme. And, like unironically, the people who listen to 40 hours of Bitcoin podcasts per week have outperformed their peers. Why? Because they held conviction, right? They kept stacking, right? This is like the big thing. Like if you were, in all these past cycles, if you just kept stacking, you kept going during the bear market, because during the bear markets and the dips, when you keep stacking, guess what? You're accumulating coins on the dip or coins very cheaply. And then later, the bull market resumes and you're extremely glad that you were stacking diligently at that time. So I think actually maybe this is something we all have to kind of do as a quote unquote Bitcoin community. Now I know there's no one Bitcoin community, there's more like multiple communities around the world, whatever. But DCA army, right? The DCA army is I know it's a colloquial idea, but just the idea is you should be a part of the DCA army, like just regularly accumulating. And as long as you're onboarding other people to be doing the DCA army. Now, again, I know DCA, again, colloquial dollar cost averaging for you guys in Europe, euro cost averaging or fiat cost averaging, whatever. But the colloquial idea is just like, you are just regularly accumulating Bitcoin. And I think that applies whether you are an individual or a company or, some other entity type. You just have to keep accumulating during the bear. and listening to Bitcoin content, whether that's podcasts, or reading articles and newsletters and books and whatever, it helps you because it helps you remember why you're here and zoom out, right? Because that's the other difficulty with this. It's very easy to get caught up in your emotions of, oh no, we're down 25% from the high. But you have to zoom out. You have to remember, what is the fiat system going to do? The fiat system is going to keep printing, right? Like it or not, what are they going to do? They are going to print.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called micro seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroSeed is not selling the washer. MicroSeed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microseed.io.